Hello, all my YouTube friends. Welcome to the 8th January 2023 Shark Scrapper Live, where we're going to talk about the big picture stuff around our world of scrap recycling and investing in it. So, if you're a scrapper or recycler, this is the place to be, even if you're an investor and not necessarily a scrapper or recycler, because of all the stuff we talk about. And it doesn't matter if you're a hobby scrapper, if you're seriously into the bucks or an investor, the stuff we're going to talk about can be of use to you. So let me know if my volume is coming off okay, if you can hear me all right. I want to make sure that I got everything set right here. So Irish, let me know if you can hear me okay. Now, today we're going to be talking about platinum, the gold to silver ratio, and some pretty interesting metals and minings kind of companies. So we've got a lot of fun stuff in store. We're going to go for about an hour, and then we're going to hand it over to Scrapping Irish once we get done with our chat. So I see some folks coming in. JR Cat, see you Scrapping Irish. Great to see you all here. Christian, great to see you. Optimus Prime, welcome aboard. Jazz Gaz, welcome aboard. Great to see you all here. Just remember we have a couple of guidelines that we use here, right? So no foul language, no beating up on each other. We are going to have some free discussion, open discussion, but let's just be respectful and have a good time sharing and learning from each other. Hello, Willie. Great to have you here. All right, now we are going to dive right in with our platinum discussion. So before we actually talk about platinum, though, I want to remind you about what we talked about last week. This is the APMEX long range gold spot price chart, and you can see that gold had this kind of flat area, but then it ran up to around a 2012-ish peak in here between 2011, 2012. Then we had this bowl, and then it went up, flattened out again. I want you to pay attention to this pattern because we look at silver, and we had a very similar pattern with silver. We had the flat area. It ran up to about 2012. Now, a bit of a more pronounced peak than gold had, but here we still had the bowl, and then it came up, and then we had another peak here. Now, compare those with what we're seeing going on with platinum. Platinum had this, let's see here, let's do this. Platinum had this, hello, where'd you go? Platinum disappeared from the market, apparently. Not sure what that was all about. Anyway, so we've got platinum here, and platinum has this weird peak in 2008. Then it crashes, does a slow recovery, and then starts a slow trend back down again. And we don't see the pronounced 2019. I mean, we have a little bit of a 2019 fall off here because of COVID, but not the same kind of pattern we saw with gold and silver. So let's talk about platinum a little bit and see if we can get a little better understanding why this would be the case with platinum. Now, some of you understand this, so let's bear through. Some of it's just for reminder here, but remember, platinum is rarer than gold. It's harder than gold, and even though it is considered a precious metal, platinum has some pretty important industrial uses, primarily as a catalyst. So a vehicle catalyst. The catalytic converters have platinum in them, which is why they're so expensive, which is why people keep stealing them. So, but it's also used in some other things, right? So in the petroleum world, they use it when they are refining the fuel to get higher octane gasoline. It's used in jewelry. Well, it's a precious metal, so yeah, that makes sense. Um, it can be used to make as an alloy for fine wire in laboratory equipment, dental and medical prosthesis. I think I have some of those, as a matter of fact, inside me. And it's also used in the electrics with electric contacts and thermocouples. Um, you may not have also known that platinum, when it's alloyed with cobalt, can be a very good permanent magnet. And platinum is used as anodes on ships, pipes, and steel piers. So it has a lot of industrial uses beyond just what we think of when we think of a precious metal. Now, you may recall with gold that we looked at where it was traded. So platinum is traded on the New York Mercantile Exchange and the Tokyo Commodities Exchange. And very similar to gold and silver, the price is set by a group in London. It's called the London Platinum Palladium Market. They set the price twice a day. But the real price driver for platinum is the industrial use. So unlike this weird world of gold and silver, platinum is actually, the pricing of platinum is driven by its supply demand factors. Also, the main production area for platinum is in South Africa, where 80% of it is produced, and Russia comes in second. So platinum is a pretty important metal for us, and in our world of scrapping, we will find it if we deal with catalytic converters for the most part. I don't think too many of us have connections with the morgues, and so you're probably not going to get prosthetic devices, and you might get some from some of the lab equipment and stuff if you deal with labs or those kind of higher end folks, but it's going to be really hard to differentiate it. So catalytic converters is where we see the real issue with platinum. Now, that I like to look at the long range trends here. So, these long range trends are very important to me to see how a product is moving. All right, now, if we go back and we look at what platinum has done for the week, we can see that it did go up 8%, right? And so it's kind of on the way up. But here's something that we really need to be thinking about. When we go back here to this long-term trend, we see right here this pickup here at the end of coming into this year. But let's think about this. Electric vehicles. Electric vehicles are slowly gaining in popularity. And as the electric vehicles pick up in popularity, are we going to see platinum prices drop off? I mean, vehicles, the catalytic converters make up the bulk of what platinum is used for, that we are concerned about in scrapping. And so if electric vehicles become even more popular, you're not going to need to have catalytic converters. So that could have some long range implications on the price of catalytic converters, what we're getting for scrap value. So yeah, I'm curious, what do you all think? Should we be concerned as scrappers that the catalytic converters are going to take a hit because of electric vehicles? Or is that just not even something that you're worried about because you may not get that many catalytic converters, right? I know here in Florida, catalytic converters are considered controlled items. So what that means is, in order for me to buy a catalytic converter for someone, now remember, I am a secondary metal recycler. Essentially, that makes me a licensed scrapyard in the state of Florida. In order for me to buy a catalytic converter from someone, they have to prove to me that it's either theirs or they are in the business of replacing catalytic converters, such as a car mechanic, and that it was legally taken from a vehicle for a replacement item. So there are a lot of folks out there that try to get away with stealing catalytic converters, and that has created a lot of problems, right? I mean, we had huge problems here not too long ago where people were going through the rental car lots and the U-Haul places, and cutting the cats off of the rental cars and the U-Haul trucks and stuff like that. So it is a really, really bad situation. So you've got to be careful when you buy them, right? I have to have, not only do I have to have, hey, Ralph, how you doing, man? Hey, Desert Scrapper, great to see you here. So not only do I have to have a picture ID, a signature, and some form of proof that the catalytic converter came off of their vehicle, or that person is legally allowed to sell me that catalytic converter. But if I sell that catalytic converter to my yard, they don't have to get that same documentation from me because I'm a scrapyard. So when I sell that catalytic converter onto another yard, all they do is make a note of who they bought it from, and they will issue me a check instead of cash, because it's a controlled item. So that way there's another level of documentation, but it's very challenging to try to, sell a stolen catalytic converter. But plenty of people get away with it, right? Because as you noted here, you can ship them off to folks, right? I mean, before I had my SMR certificate, I literally found a couple of catalytic converters on the street. I didn't know any better. This is back when I was a hobbyist, and I was trying to figure out how I was going to sell them. I saw on all the forums where people were buying them, but it's like, how do I sell this? My local yards wouldn't touch them. And then I found RR Cats, Rockaway, and they said, "Oh, just send us a picture of your ID card. Your driver's license." So I sent them a picture of my driver's license and the cats, and they bought them from me. So it's kind of, each state is a little bit different in how they handle them. But yeah, it's that's the challenge with catalytic converters. But where else are we going to find platinum from? It's in the scrapping world. It's going to be a challenge for us to really find, platinum other than catalytic converters, and unless you're connected to one, or you have a source that's in one of these other industries. Now, and I'm also curious if any of you buy platinum the way a lot of people buy gold and silver, either as bars or rounds, or legal tender. There's no platinum legal tender that I'm aware of. So do any of you buy platinum as rounds or bars? I don't. I just don't do it. For whatever reason, I have a hard time seeing it as that same kind of wealth protection kind of thing, the way a gold or a silver piece would be. So Desert Scrapper says he has a platinum chip. So that's interesting. A platinum chip. I mean, it's just a chunk of metal that was cut off of a piece of platinum, or is it from, can you give us a greater detail there? That's kind of cool. All righty. So the next thing that we want to talk about, as promised, it came up last week, and somebody had asked me about the gold to silver ratio. I promised to talk about the gold to silver ratio. Now, in the APMEX website, no matter where you are on here, you can go to the gold to silver ratio and take a look at it. So let's talk about gold to silver ratio. Now, in essence, the gold to silver ratio is pretty simple, right? It is how many ounces of silver are needed to buy an ounce of gold. And that gets, that makes it pretty simple to think about. If you want, you can just take the price of gold, divide it by the price of silver, you get the ratio. Another way to think about it is, if gold is going for, say, $1,500 an ounce and silver is $15 an ounce, then the gold to silver ratio is 100. There are no units on it because it's, ounces divided by ounces, or dollar per ounce divided by dollar per ounce. So it's a unitless relationship. And you got to be saying to yourself, unless you're a trader in this process, you're probably scratching your head going, okay, that's nice. What do I do with it? And that's a really important question. So the first thing to understand is, people buy gold and silver for various reasons. Hey, Andrew, how you doing? Great to see you here, man. Fishing Frustrations UK. That's an interesting name, man. Nice to see you here. A lot of people buy gold and silver as a hedge against inflation. A lot of people buy gold and silver because they believe that it is going to replace fiat currency when fiat currency crashes. Some people buy gold and silver because they just think that gold and silver rounds and the ornamental ones and the objects people make out of them are just pretty, or in the form of gold and jewelry too, right? But if you're an investor in gold and silver, then you've got a different perspective. So understand, when I say the word investor, I'm thinking of someone that has a long-term perspective on what they have acquired, as opposed to a trader who is trading on a very short time scale, sometimes hourly, sometimes days. And it's the traders of gold and silver that really like to work in and with the gold to silver ratio. All right, well, let's take a closer look at this and talk a bit more about the gold to silver ratio. Now, when we look at the gold to silver ratio, you look at a long-term trend of the gold to silver ratio, and essentially it's been about 60-ish, or between 40 and 60. So let's just say 60 for right now. Each trader is going to take a little bit different baseline perspective, but we're going to say for our discussion today that you take a baseline of 60. And so whenever you see the gold to silver ratio above 60, it indicates that gold is outperforming silver, or silver is cheap. And that would drive your grading decision. So if you have a gold to silver ratio of 100, and you can see in this chart that it got there not too long ago, right? Here, let's open this up a little bit. And we can see that we were at 94 at one point here. So if gold to silver ratio is close to 100, what that's telling you is that there's a spread between gold and silver. And if you believe in this theory, what you're going to do is you're going to either sell your gold or buy silver. The argument being that silver is going to increase in value so that the gold to silver ratio will get back to its long-term average of 60. Or gold is at its maximum value right now, and it's going to start coming down in order to return the gold to silver ratio to that long-term norm around 60. The same is true if the gold to silver ratio is below or below 60, which it hasn't been for a long time in this world. But down here you see it was in 2011, it was down around 38. And so 35, 33 down here. So when the gold to silver ratio is very low, then you would be saying to yourself, well, that means that either silver is too expensive or gold is too cheap, so I'm going to buy gold and sell my silver. because you're expecting that the gold is going to go up in value so that the gold silver ratio can get back up to 60, or the silver is going to decrease in value again to bring that ratio back to that norm around 60. But you can see there's a couple of challenges here, right? The first one is you have to decide what you believe that long-term gold to silver ratio should be. I have seen people out there that say 60. I've seen other people out there that say 40. If you go back to the days of the Romans, it was 12 to 1. So that what you use as your baseline is a very important influencer on how you use the gold to silver ratio when you're trading. Now, I'm not a trader. So for me, I really don't pay attention to the gold to silver ratio, because when I buy physical gold or silver, I'm doing it purely as a hedge against inflation. I'm going to buy it and I'm going to hang on to it. I might sell my silver if it gets up into the $50 range, $40, $50 range, because I will have bought it when it's down in the 18 to 20-ish, 20 plus range. So I might sell off some of it in order to make what I have less expensive, or actually, free. But I'm not a trader in gold. Now that brings up the next question. If you're going to trade in gold and silver, if you're going to take advantage of this gold to silver ratio, you've got to be able to trade your gold and silver, and you got to do it pretty quickly, right? Well, you can't just sell your physical gold and silver on the stock market, like, go to a website and say, oh, I'm going to sell it right now. You can go to a place like APMEX or Kitco or one of those places, and you can sell it, but they've got their premiums and such attached to it. So you've got to have a really good spread in order to make your money on it. So physical gold and silver doesn't really lend itself to trading in this sense. That means you're probably dealing in ETFs. And that's the only reason that I would ever buy a gold or a silver ETF, electronically traded fund, because you don't own, in an ETF, you don't really own the gold or silver, right? It's a piece of paper that says you do, but you really don't. And many, many channels have pointed out that there actually is a lot more paper gold and silver than there is real gold and silver. So, hey, Pooh's mate, great to have you here. So it's, it's if you're trading, if you're taking advantage of the gold to silver ratio, it's because you want to trade in gold and silver. And if you're doing that, then you're probably not buying physical gold and silver, but you're doing something like an ETF. So anybody out there doing the ETFs? Anybody out there doing the daily or weekly trading of gold and silver, paying attention to that gold to silver ratio? Or are y'all doing similar to what I do, and when you can buy a little physical gold and silver as a hedge against inflation, or what folks like Scrapping Irish do, and buy gold bearing material, with the idea being that you're going to process that material in order to get the gold later on at some point. And that's a whole nother discussion, maybe for us to have someday, but way beyond the scope of the gold to silver ratio. So any questions out there? Any questions out there about gold to silver ratio? Gas gets it, right? Studied it. There's a lot more paper gold available than physical gold. I mean, that is a huge issue, right? So unless you're actually trading the gold and silver to try to make money, I wouldn't. I just wouldn't do it, right? I don't do ETFs. Well, here, wait a minute. Let's see. There you go. This is what I meant to do, which I would call prospecting digitally. That is hilarious. Oh man, I love it, man. That is great. Digital prospecting digitally. That's great, man. I got to remember that one. Desert Scrapper asks, where do you buy gold and silver? So I actually buy when I do buy, and I don't buy very frequently, but when I do buy physical gold or silver, I either buy from APMEX or Kitco. These folks over here, Kitco. Let's see if I can get their website to come up. Nah, doesn't want to come up right now. So either APMEX or Kitco, I've dealt with both of them. They are good, reputable folks, decent prices. I don't usually buy the Eagles or, so I'm not usually buying the high-end premium type silver and gold. I'm usually buying rounds of gold and silver, and I buy from reputable type of refineries that that you can have some assurance that it hasn't been counterfeited, because they have processes in place to try to defeat the counterfeiting. And by going through a place like APMEX or Kitco, you have a little more assurance too that it's been vetted. Not 100%, nothing is 100%, but at least you have a little better assurance. Mints like the Sunshine Mint actually put a mint mark on their rounds and their bars, and they have a little reader thing so that you can look at the mint mark and you can see if it was a counterfeit or not. I haven't seen anybody that's been able to demonstrate that can be counterfeited, but it's something to think about. So this is interesting. Irish says that he buys paper gold, and he buys it on an app called Revolut, but it's paper. So Irish, I'm curious, are you actually doing any of the trading kind of stuff going on, or are you just buying it to hold it as an investment? Just curious there. Raffle Scrapper, welcome aboard, sir. Great to have you here. All right. So before we jump into our stock discussions today, which are going to be really interesting because they're actually about metal mining companies, just a quick safety note. Hands. Unlike our eyes, we have two hands, but we also have 10 digits on them, and we use these a lot. So I'm a firm believer in gloves. Love gloves. Different gloves for different purposes, right? You've seen me on my street scraps wearing the big, heavy, thicker gloves because there's a lot of sharp things that can easily cut me. They're bulky. You can't get a fine grip with them. When I'm taking computers apart, I always have on the gloves that have the nitrile pad with a cloth glove. Gets me a little bit better dexterity, and I can grab things a little easier, still protecting me against all those little sharp points that are on the back of the boards. And if I'm going to be operating or using nasty chemicals and stuff, then I want to have the right kind of rubber gloves on. And it's really important that you wear the right kind of gloves, because some chemicals will eat right through the wrong kind of rubber gloves. So make sure you've checked to see if a nitrile glove is the right thing for what you're using. Because the last thing you want to do is think you're safe and then have that rubber glove burn up on your hand because of the chemical reaction. Okay, now enough of that. So we're going to get into the stock and bond discussion now. We're talking about metal and mining companies. Now, again, just to remind everybody about where this information comes from, I get it from this source here, the Value Line Investment Survey. They do not accept advertising, so all of the information they present is unbiased data and then analysis from that data. I'm a very boring investor. I am investing for dividends. And so when I analyze a company, what I'm looking for is 17 years of increasing cash flow per share, earnings per share, and or dividends per share. And I'm primarily concerned about the dividends per share. So a company has to have passed at least one of those three, but in particular for me, they have to pass that increasing dividends per share for the last 17 years. And of course, I'm looking for at least a 4% interest because I'm trying to at least keep up with inflation. And 4% is a good, reasonable number for me to try to earn. So when we take a look at the first company that's out there, this is a publicly traded gold company. Now, I know you're shaking. You're thinking, well, wait a minute. I didn't think that the gold miners and the gold companies, really did that well. And it's one of those really interesting things that we get into, because miners and stuff, it's hard, right? I mean, mining companies spend a lot of money. And it takes a lot of asset to be in this business. Now, Royal Gold is a little bit different because they acquire and manage precious metal royalties and metal streams. So that means that they're focused on financing projects that are in the production or development stages, and get the royalties from those. That's a little bit different than actually being a digging a hole in the dirt mining kind of company. All right. Now, when we look out here, we can see that Royal Gold is only at 1.4%. So I'm really not that interested, but they are qualified right here. Look at this. They are a div 0, right? So that means they've had 17 years of increasing dividends per share. Of course, it's going to cost you over $100 per share to buy into this company, but at least they're qualified, and that dividend is going to be relatively safe. A little bit different look at a view on all that data from last week. We looked at it one way. This week we're going to look at it this way. So here you can see here's the cash flow per share, the earnings per share, the dividends per share, and you can see those dividends are constantly going up. And if you look at the changes from year to year, you can see the yellow, which is the change of the dividends per year, is always on the positive side. So that's why they are qualified. But again, at 1.4%, that really just doesn't get my attention a whole lot. But moving away from the precious metals, let's talk about another metal that we all like, aluminum or aluminium, depending upon where you are in the world and how you like to say that. I'm betting most of you have heard of Kaiser Aluminum. Kaiser Aluminum, they produce semi-fabricated specialty aluminum products. They offer rolled, extruded, and drawn aluminum, used primarily in aerospace, defense, automotive, consumer durables, electronics, electrical, and machinery equipment. They have 13 manufacturing facilities, 1 in Canada, 12 in the United States, and they've got almost 4,000 employees. So, pretty big company there. Now, here's you see that Kaiser is at 4.3%. So it is of interest to me, right? 4%, that gets my interest. The valid price, $75-ish a share. By the way, this data is valid the 30th of December, 2022. So at, 75-ish a share, not bad, not a bad price. And what you can see in the dividend per share, they only have 16 years of data. right? They weren't posting dividends back in 2006. So, are they really qualified or not? They'll definitely be qualified, next year once this rolls forward. But right now it's a little bit iffy because of that first year of dividends there. But once they started paying dividends, you can see they went up every year except 09 to 10, where they were flat. So that's fine. We allow a flat year. And then they were up every year since then. So Kaiser Aluminum, if you're thinking about getting into metals and mining kind of stocks, Kaiser Aluminum might be one that you might want to think about. Here's what all of that data looks like graphically. We saw there's a lot of up and down in the cash flow per share and the earnings per share. The dividends pretty consistently going up. Real good sign there. And then again, here we see the cash flow and the earnings year-to-year change, but the yellow bar, which is the dividends per share, is always above the zero line, except when it was 0 from 9 to 10. So aluminum, I don't see us moving away from aluminum in anything. What do you all think? Is aluminum a reasonable investment? Is this a reasonable way to invest in aluminum? I mean, you're not going to go out and buy a whole bunch of bars of aluminum, right? So, if you want to invest in aluminum, a company that deals in aluminum and that has consistently good performance, like we're seeing here, could be a viable way for us to invest in aluminum. Poozmate, remember 2009 to 10 was recovery from the 08 crash. Yes, yeah, exactly. Spot on. And that's certainly a good point for what, and actually it says a lot about them, right? They're recovering from that crash, but they were still paying out their dividends. Whereas a lot of people either stopped doing aluminums, stopped doing dividends or went down in their dividends, and they at least stayed flat. They were still paying them, they just didn't increase them. So that's viable. Irish, you're cracking me up, man. Yeah, I don't think I drink enough Coca-Cola to really justify an investment in Kaiser just for the cans. But then again, every time I have a Coca-Cola, I got some aluminum, so I'm sort of supporting the company that I would own stock in. By the way, I do not own stock in Kaiser. So, and I probably should, make it clear that I'm not a financial advisor. I'm not certified, licensed, or in any way legally allowed to give you any financial advice. So this is purely sharing with you all the kind of stuff that I look at when I'm making these kind of decisions. So let's see, Gascas, what you got here? And to keep from going negative, they did not purchase stock. They used their reserves. Yeah. Yep. So good point. Responsible company foresight. Exactly. And that's the kind of stuff that you're going to learn when you dig into this kind of data. You get a good feeling for the companies that are trying to be responsible. And hey, I got to admit, I'm looking at this as a potential shareholder, or if I talk about a company that I own, a shareholder of that company, and I want them to be responsible, not just to me as a shareholder, but to everything that we're involved in. Hey, Cruiser Mac, great to see you here, man. Anybody interested in aluminum? This is a possible way for you to go after aluminum. All right, but let's go look at this one. Rio Tinto. Now, I'm sure that some of my friends over in the UK recognize this name because there's a great big old building down in London with this name on it, because that's where their headquarters is. So Rio Tinto PLC is a major international mining group. They're based in the United Kingdom. The company locates, develops, mines, and produces a diverse range of mineral resources. Their major products include aluminum, copper, diamonds. Ooh, we like diamonds. And it also includes various energy assets such as uranium. So, wow, there's some things to be very interested in here. The dividend yield is 8%, so that's double what I normally look for. And the price isn't too bad. It's 68, 69 bucks a share. But they're not qualified. They're just not qualified at all. Yeah, they coming out of the 2008 crisis, their dividends went down. Then we see 2015, 2016, their dividends went down again. And then here we are, COVID related stuff, and dividends are down from 21 to 22, and then forecasted to go down. By the way, when I show you this information, you'll notice that usually the last 2 years or the last year is going to be in bold. And this last year that's up here is 2023, and we're in 2023. So when you see this bold number, that means that these numbers have not been finalized. So they haven't submitted their final reports and had their, done all their audits and stuff like that, right? So the unbolded are their final numbers. These bold numbers could change. So what you're seeing here is that the dividends are likely to go down. But Rio Tinto is interesting because they do have this nice high dividend yield. So if you're not as rigorous as I am, if you're not as stodgy and boring, and if you're not qualified, you're not qualified kind of perspective, Rio Tinto might be something to think about. They've got all aspects of the mining game going on, and they're all across the board, right? Uranium, copper, aluminum. So it's something to think about. And if you want to take a look at all three of those side by side, here's the blue is Royal Gold. You got Kaiser in the magenta brownish color, and then the green is Rio Tinto. You can see that cash flow per share, Rio and Kaiser are outperforming Royal, but Royal is a bit more steady. All of them trending up. And then here you see earnings per share. A little bit different story here, right? Kaiser, Rio in the green, it trends up, but man, that's ugly. That's an ugly, lot of up and down there. Kaiser earnings per share, yeah, it's really not going up. Royal Gold trending up and not a whole lot of gyrations. And then in the dividends per share world, this is where I live and spend most of my time. You can see that Rio has a nice uptick in their dividends here compared to Kaiser and Royal, which are relatively steady and going up. But you have to ask yourself, is this a dividend trap? Are they just trying to convince people and come in and buy these shares based on the dividend, or is there more to it? So whenever I see stuff like this, I get a little bit nervous that it could be a dividend trap rather than just a good steady expectation of what can be paid out. So let's see, Scrapping Irish says, I just close my eyes when picking shares and throw a dart at the wall, and whichever company it hits, that's for me, I was even worse, Irish. Before I got my MBA, and actually had spent some time studying this. Um, my modus operandi was to buy the most expensive stock I could and wait till they went bankrupt, and I lost it all. So, yeah, that's a. Those are not. Neither one of those are really good methods. Okay, I don't recommend either one. To be perfectly honest with you. Urban Prospector, let's see, DS, is that Desert Scrapper? Is that what you're saying? Mostly my own. Oh, you're having a conversation with Desert Scrapper. Let's see. What did you say? Who do you? Okay, so Desert Scrapper, who do you? I'm guessing you meant who do you buy for financial advice for the stock market? I hope I'm following this conversation correctly. And then Urban Prospector is coming back saying, mostly my own findings of the ETF or the stock I'm looking at. So Urban Prospector saying he does a lot of his own research. Yeah, and that's exactly what I do here too. Um, Gaz, you would think that because Rio in effect spread their bet across commodities, that they would be a good investment. Um, yeah, it's an interesting discussion. It really is a good point that you bring up, Gaz, and I I understand the argument, but then again, there's also an argument that says be good at what you're doing. Now, in the mining world, it's really hard to just mine one thing, right? If you're mining gold, you're probably going to have other stuff other in there, right? Silver and lead and those kind of things that are just in the ore. And so, it's really hard for a mining company like Rio Tinto to just be in one thing, whereas Kaiser isn't mining the aluminum; they're working the aluminum. So, a very different kind of twist on what they're doing. So, plus Rio Tinto has to deal with all of those upfront costs that are associated with mining. Huge equipment and lots of overhead and regulatory concerns. So that kind of stuff is, while Kaiser Aluminum still has to have a lot of big equipment, right? They're melting huge buckets of aluminum and then shaping it, cooling it and shaping it, and which is a fascinating thing to see. I'd love to go to one of those plants someday. But I think that the overhead costs of mining is significantly more than a company like Kaiser that is doing the shaping and forming. It's also interesting to me the amount of money that goes into these companies. When some of you may have heard that Pan American Silver, PAAS, was involved in some merger kind of stuff, and the numbers they're talking, in the billions of dollars that are floating around when they talk about these companies, doing some acquisition and mergers. It's mind-boggling to me when we think about that kind of money. So let's see. Oh, wait a minute. First, let's see. JR Cat is saying Berkshire Hathaway. How many of those do you have? I don't have any Berkshire. I believe in what he says, but I don't have any of his stock. Urban Prospector is saying Desert Storm, remember, on investment person is mostly just someone pushing his own goods that pay them the most in the long run. And down here, Urban Prospector saying, don't forget the electric cars are going to drive a lot of mining stocks going forward. Good point. There's going to be a lot of aluminum a lot of copper, a lot of lithium. So there's a lot of effort, a lot of metal that's going to be used in those cars, even though they're not going to be having big heavy engines in them, internal combustion engines. So yeah, cars of the future may not have as much platinum, but they're probably going to have a lot more aluminum and maybe even copper too, right? So that's a very good point. Okay, so I'm going to open it up now, and I wanted to talk about I'm going to go ahead and leave this comparison chart up here just for a little bit longer. But I wanted to talk about a survey that I did recently. You may remember back in October, I went diving with sharks. Fascinating experience. And there's a couple reasons why I wanted to bring up this survey. After I went diving, I did a survey where I asked all of you, would you consider going shark diving the way I did? And we had 84 people responded to the survey. 19% of you said, yes, you would do it in a cage. 27% of you said, yes, and no cage was required. Got to admit, that number was higher than I was expecting. 6% of you said, yeah, maybe. And 48% of you said, no way. And I probably could have said, no way in hell. And you would have agreed, because there are just some people that aren't going to do it. And I get it 100%. Now, I thought that was kind of interesting. I was a little bit trepidatious when I was first going in. I've been scuba diving for many, many years, and I have been in the water, and sometimes I see sharks, sometimes I don't, but I've always known that they were around me. When I was getting in this time, we were just snorkeling, and so I was okay. But I mean, I knew the shark expert that was out with us. I've seen her on Shark Week before, so I knew she knew sharks and she understood sharks, and she got in the water first. And then I got in the water right after. And I've been around sharks enough that I kind of knew what to look for, and I felt comfortable. When the two bull sharks showed up, I got a little bit, I don't want to say nervous, but I was paying attention to them more than the nurse sharks, because I knew the bull sharks can have an attitude, and when they get curious, it can usually be bad. So, what I would suggest is, if you have on your bucket list that you want to swim with sharks, find a reputable company like Florida Shark Divers. I'll be happy to connect you to them if you're interested. They do dives off the Keys as well as Jupiter, Florida, different kinds of dives for different levels. They're reputable and they know what they're doing, and those are the kind of people that you want to do your dive with. If you're going to be diving with a group and it's something more like, if you're out there doing great whites, you definitely want to be in a cage. No question about it. Absolutely, you want to be in a cage. But if you're doing it, like off the coast of Florida, like I was, where the chances of having an aggressive man-eater show up are kind of slim. And even if they are, they're usually not overly aggressive like white sharks. That's a different risk calculation. So again, if you're interested, let me know. I can get you connected with the people at Florida Shark Divers. By the way, I'm not affiliated with them. I have no financial connections to them whatsoever. They're just a group that I believe does it right and is worth considering if that's something that you want to do. Now, the other reason why I wanted to bring this up in this live stream was back in early December, I reached out to the University of Miami to let them know that we were ready to make our acquisition of a second shark for tagging. We had our $3,000 ready to go. And the director of the program, Dr. Neil Hammerschlag, responded to me and told me that he was leaving the program. And He wasn't sure what the university was going to do moving forward. I have had multiple conversations with Dr. Hammerschlag about what's going to happen. I'm still trying to get some confirmation from the University of Miami on what their plans are for the program. But I have held on to the donation until I know for sure what's happening. Now, I have been researching other places that we can donate that money. There's other good scientific institutions. Many of them have a similar kind of shark adoption program that we could be a part of. But I just wanted to let everybody know that we're still collecting money. If you want to make your donations, great. One way or another, we are still going to donate to tagging a shark, to shark research, to being a part of that. At this stage, I'm just not 100% sure if it's going to be the University of Miami's program, if it's going to be another program that I have vetted, or if it's going to be the new program that Dr. Hammerschlag wants to start. So my conversations with Dr. Hammerschlag, he wants to start his own new US-based nonprofit for shark research and conservation. He wants to be able to do his work uninhibited by or unconstrained by the bureaucracy associated with a large academic institution. And trust me, if you think dealing with the US government is convoluted and bureaucratic, try dealing with a large university. Oh my God, they're worse. I mean, they're a lot worse. So I understand where Dr. Hammerschlag is coming from. I have a lot of confidence in him, but he's still trying to figure out what's going to happen. So we've got one of three things is going to happen. The university will convince me that the program is going to move forward with a new director and they're going to keep doing all the stuff they always did. Fine. We'll have a new program that we will support. I'm still researching those. And by the way, if you all have seen any out there and you want to recommend them, please do so. I'll be happy to take it on board, dig into them, look into them, see if they make sense for us. Or three, we'll become part of the founding members of the new thing that Dr. Hammerschlag puts together. I wanted to make sure everybody understood that because I try to be as transparent as I can with all the donations that folks have provided. And so that's where we're at. And I will keep everybody posted as we move forward. I was hoping that I would have some firmer answer for you all before now, but I didn't want to wait any longer because it was just dragging out. I needed to let everybody know. All right, let's catch up with the chat here. Let's see. When we were talking about the sharks, Desert Scrapper said, "Oh, come on, you got to live with the moment." Like when the great sharks, you see, Desert Scrapper, if I was in the water and I was not in a cage and a great white shark appeared, there would have been a moment, that's for sure. A moment of the water getting very warm. Urban Prospector responding to Ulrich. Not if you want to limit any possible loss. If you want to own stock, then you must pull your eggs in one. Oh, diversify. Okay, yeah, we're talking about diversifying. Yep, yeah, I think diversification is important. I do own some stocks, and like I said, if I cover a stock that I own, I will be sure to let you know that I own that stock. But I am diversified across multiple industries. Urban Prospector continues on by saying, and if you cover yourself and are better diversified to covering loss, however, your profits are also limited with ETF compared to owning precious metals and stock. It's mostly a matter of how much risk you're willing to take. Urban Prospector, very good point, spot on. It's all about the risk that you're willing to take and how much you have educated yourself in the stock market game, because you can lose everything. And worse yet, if you start playing futures and calls and puts and stuff, you can actually lose money. So yeah, make sure you're very, very careful. All right, folks, we are about out of time here. I'm going to wrap this up so we can get over to Scrapping Irish's live stream. That'll be picking up here right at 3 p.m. Eastern Standard Time. And that's when we're going to talk about why the Christmas tree is still up. I'll see you all over on Scrapping Irish's stream.